Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Edward Hertzman. He's the founder and president of Sourcing Journal, and we are going to talk about current events and how it impacts your investing. Ed, thanks so much for joining me over at MarketSite. Let's get right into this. Let's talk about automation and robotics, super hot topic right now. Does it truly have an impact on the jobs market and people jobs in particular?
I think that's a complicated question. I think the short answer, unfortunately, is as automation and robotics becomes adopted on a large scale, we're actually going to see job displacement of the workforce and de-skilling of the workforce. I think if we get a little bit more into specific product categories, we're seeing a lot of technological advancements. You know, there's a company, Software Automation, who recently announced a partnership with Li and Feng, who has really figured out how to automate a t-shirt. And there we're going to see, in that category, it's a very basic operation. A lot of the people involved in that will probably, unfortunately, be displaced. Flex, who's working with Nike right now, that's another category. Footwear, we're seeing automation and robotics really come a long way. The question is, how long will it take before automation and robotics is adopted on a large scale? And what's the large impact to the workforce? But for the jobs that are created, whether it's a machine operator, someone that's going to be maintaining the machines, creating the machines, I think of the millions and millions of people working on the very low end skill set, they're going to have to find other means of employment.
Right. But I mean, even though it might eliminate those kinds of jobs, it could also create more jobs in that specific industry, almost like what social media did. It kind of shifted advertising spend from, let's say, broadcast, for example, to social media platforms. I mean, company, even our company, you know, Fortune 500 publicly listed companies have social media dedicated teams on their, communication staff.
I think there's going to be financial benefit to it. I think there's going to allow apparel and footwear companies to react quicker, which means less inventory, more profitability. There's definitely going to be financial upside, but I think when it comes specifically to the job force, being those that are making the clothing or the footwear, I really do think that no matter how you look at it, there's going to be more jobs lost than gained. And this is probably going to be more in the developing countries, those that are actually manufacturing the goods. There will be, for example, like a basic t-shirt or something of that nature. It's going to be easy to automate. A dress like you're wearing, which requires a lot of handwork, that's still a long way off. So we're going to see jobs, remain in place. But unfortunately, I do think the vast majority of us agree that there will be.
Well, let's talk about another disruptor, online retailers, of course, your Amazon.coms of the world, Walmart buying Jet.com. You can kind of see the direction that that's going to go. Do you think that companies have to have that omni-channel presence? In addition, they have to have brick and mortar, they have to have online retail experience. I
think talking about Amazon and every other online retailer in the same sentence isn't even comparing apples to apples. I think that right now there was an analyst last week that talked about by 2022, Amazon may potentially do $25 billion in online apparel sales. I think this year they may cross $7.5 billion. A lot of people have tried to resist working with them. I think now they're realizing, don't fight the beast. Let's figure out how to engage. But they're very clever. I mean, they've invested and bought 3D body scanning companies and whatnot, and they're figuring out how to be more and more and more efficient in how they create their private label brands. So we're going to see more business going to Amazon. I think for the traditional, quote unquote, direct-to-consumer brands whose business proposition early on was, we don't need brick and mortar, we don't need that added expense, we're actually seeing a shift in that they do need it. A great example would be a Bonobos, who redefined the shopping experience a little bit. They're in great locations, but they're not taking the square footage that a traditional retailer once would have needed. What they've done is taken small footprints, they recreated the store experience, meaning I book an appointment, I go in there, I may sit at home and not know if I'm a 40 regular or a 42 regular. If I just order and then I return and back and forth, there's a lot of wastage there. By making an appointment and going into the store, not only do I have the personal shopping experience, do I know exactly what I want to order, that I'm going to also see a selection of product that I might overlook online. So I think whether it's a Warby Parker, whether it's an Untuckit, whether it's a Bonobos, we're seeing this shift. I think that the notion that brick and mortar is going to go away is completely right. That's a little extreme.
Well, let's talk about something else. This is super interesting. We haven't covered this on Trade Talks, but counterfeiting and under invoicing also impacts the cost of apparel and general merchandise. Can anything be done about that? How does that all happen?
Well, this is a sensitive topic, and maybe if I was later in my career, I'd be a whistleblower. But I think that this is, unfortunately, this is going on in all too often. And I think we have to look at them separately. One, I think counterfeiting and the stealing of intellectual property is one of the reasons that Trump, for example, is going so hard after some of these countries like China, and platforms like Alibaba are just enabling companies to sell counterfeit merchandise. A lot of money is being lost because of the theft of intellectual property. Under invoicing is something that needs to be taken very seriously. I think that there's a lot of goods. I know for a fact there's a lot of product entering the market that is being sold illegitimately, and it's being done by under invoicing or creating false labeling,
right,
which allows them to pay a different duty. And I think what needs to happen is reverse engineering. I think you need to walk into a store and see a jean at $9.99 or $12.99 or $14.99 or a T-shirt $2, $3 and start to wonder, well, what's the cost that it would actually take for a company to make this? And you start to question, how are these companies getting these goods? And for customs to pick up on all this, it's going to be very difficult. But I can tell you without question, it's happening. And the companies that are playing by the rules are getting punished right now by a lot of people that are playing hanky-panky.
All right, well, let's wrap up with that. Trump's trade moves and the potential impact to U.S. manufacturing and foreign relations. Do you think countries will stop doing business with the U.S., or can these policies really have an impact on what we do with trade and how it's passed down to the consumer?
Well, right now, without question, it's causing a lot of disruption no matter how
right,
you look at it. The idea that, let's just say something goes into effect with China, you can't move all your manufacturing out of China to other countries. There's just not enough capacity. Also, back to school and holidays baked already, so if this was to happen immediately, stuff is already in production. Right. I think what's going to happen is, no matter how you look at it, whether it's NAFTA, whether it's China, even let's look what happened last week with the EU putting tariffs on the American product, it's basically going to trickle down to the consumer. The consumer will be penalized. We've done some rough math. If at a 25% tariff increase for a retailer to maintain the same margin, they're going to probably have to increase the price of goods that we pay by minimum 20%. And the idea that Trump has that it's going to create American jobs, there was a statistic that came out last week. For every one job created, there'll be 4 lost. So we're going to feel the impact. The consumer's going to feel the impact. We're going to buy less. It's going to become more expensive, which will actually do the opposite of what he's trying to achieve. And then there's going to be this world tension and the ripple effect of that. But business will have to continue. We're going to have to find places to manufacture our product. It's just going to get more complicated, and it's causing a lot of disruption.
All right. Well, thank you very much for joining me at MarketSite.
Thank you
for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.